Welcome, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. Talk a little bit about what's going on out there, what you ought to do about it. It is 6:24. Wow. I mean, we're really in the midst of summer. Amazing how quickly the year goes by, isn't it? And it's even more amazing how quickly the years go by, but that's a different conversation. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended as investment advice. So what to watch this week? Well, Monday, kind of a snooze fest, little Fed speak. Tuesday, consumer confidence number coming out. Wednesday, new home sales. That's not going to move the markets. Thursday and Friday, big news days. So on Thursday, we have the initial jobless claims. We're expecting 240,000. The higher that number, the greater the likelihood that the Fed cuts. Lower the number, stronger the economy. So it's kind of a seesaw there. We're going to get our second revision of GDP. We're not expecting any change. We're looking for 1.3%. On Friday, personal income number comes out. PCE number comes out. That's personal consumption expenditure. We're expecting that to come in at 0. That'd be great for inflation. We have the core PCE coming out. The year over year. Friday is a big deal, potential market mover. Friday gives us a chance to see that, inflation is continuing to trend down. Last week's heat map, and look at what's lighting up the screen red. NVIDIA, Broadcom, they normally trade together. Qualcomm, other than that, it was a good week. This is the 1-year map. Now, NVIDIA is still up 179%, so don't cry for me, Argentina. And there have been a number of places to make extraordinary returns. Microsoft up 32%, Alphabet 45%, Meta 76%, Lilly 96%, Amazon 44%. I've literally taken trades in every single one of those, AbbVie, over the last 12 months. Hope you made money off of them as well. Market breadth. So we like to look at new highs versus new lows. So on the New York Stock Exchange, it was about a push, 166 to 160. On the NASDAQ, much gloomier picture, 469 new lows to 260 new highs. And the winners are, for the week, Caesars Entertainment, Gilead Sciences, Accenture, Corning, O'Reilly, Autodesk, Supermicro, Corpay, Aptiv, and Synchrony Financial. And then who got their teeth kicked in? Builders, First Source, Deckers, he's the biggest losers. Broadcom, AES, Moderna, On Semi, Jabil for solar, Line Technology, and EQT. Growth funds attracted capital last week at a record pace. Largest weekly inflow ever to U.S. growth funds. It's where all the money's being made. Market has been very kind to us. We have now gone 377 days without a loss on the S&P of more than 2.05%. Inflation risks are starting to fade. See, up here it says inflation, higher inflation. Look at how that is starting to, we are beginning to see genuine evidence that inflation is now, quote unquote, under control and retreating. Workers are starting to make some progress. That's awesome. For the last 13 months, wages have gone up more than the cost of living. Nothing worse than busting your butt, right? And you feel like you're getting further behind the harder you work. Well, we got that turned around, which is nice. July is generally a really good month, or it has been. Since 2020, it has been up 100% of the time. So hopefully it'll be up this time. The bulls continue to hang on. So survey done by the independent investors, 44.4% are bullish compared to 22.5% being bearish. Fed probabilities of a rate cut have moved up a little bit since I was with you last week. It was 70% last week. Now it's 74%. Get some more good inflationary data. That could be even higher next time I'm with you. Sector returns for the last year. So the S&P is up 26% for the last 12 months. 3 have beat, 1 barely. Financials up 27.55. Communication, 42.89. Technology, 44.16. What's underperformed? Everything else. Industrials, energy, discretionary, utilities, and staples have been the worst. Let's take a look at the charts, see what's going on out there. Starting with the SPX, which is the S&P 500. There you go. So that's a 6-month chart. Yellow line is a 50-day moving average, which is sloping up. That's bullish. Trading well above the 50-day, also bullish. What about on the Qs? Qs are starting to roll over. The MACD is almost turned red. So I'll tell you what's going on. Money is coming out of big tech right now and going into some other areas. Now, does that mean we want to ban all of our technology positions? No, there's always going to be some of this. I mean, look, roll over. So far, the highs are getting higher. So we're still in a bullish market, but we are, let me take a look at something. You know, we have broken below that lower trend line. Where's our next level of resistance? Right in here, former support, or level of support. That was former resistance. So at 465-ish, we're at 475. If we go below that, then we could be looking to fall down to here. If we go below that, we'll just see how it plays out. I'll be back with you next week. So let me show you latest and greatest track record for our Inner Circle folks. This is where we actually provide for them trade ideas. So for this year, we have closed 69 trades. 67 of those have been profitable. Average return, 17.93%. Average hold, 18.27%. So past performance doesn't guarantee future results, but I just want you to know, we kind of know what we're doing. We're averaging almost 1% a day for almost half a year. I think you'd agree that's pretty darn impressive stuff. So kind of pay attention to anything that we put out. All right, guys, good being with you again. I shall see you next week. And until then, be safe, be blessed, and bye.